Hi and Happy New Year, everyone. Wishing everyone a better 2023. After a forgettable 2022 with Asian equities falling 17% in US dollar terms last year. 2023 will have its fair share of challenges and volatility, though amidst this there are opportunities. Focusing on the 4 key themes for Asia this year. The first point on macro factors will be the biggest challenge in predicting market direction. The next 3 points give us reason to remain positive on Asia. China's reopening and refocusing back to growth are good for the region. Meanwhile, India and the ASEAN region's long-awaited investment cycle could finally happen. Delving into each point, the macro backdrop remains a challenging one. Moderating inflation as seen in recent US CPI data could signal the end of monetary tightening. A rate pause by the second half may be a possibility, but a cut in rates is a trickier one to call. Equally, a high chance of a US recession could pose risk to earnings expectations. At least we have seen the brunt of rate hikes and recession fears reflected in share prices. Asia as a region continues to look cheaper, with stronger balance sheets and better growth. Given the specific near-term and long-term drivers, which we will discuss in the following slides. First, on the near-term outlook, China's reopening will provide a boost to growth for both domestic China and Asia as a region. COVID numbers may look concerning, but mobility indicators have shown swift recovery. For the region, pent-up demand and travel amongst the young, affluent Chinese with high spending power makes it a promising year for consumption in the region. Next, in the longer term, we have always held the view that Asia offers better structural growth. China has always been an important engine, even though growth rates have been falling and may stay structurally lower. The positive is that the government's narrative shifting back to the economy is encouraging, because it remains a balancing act for the government between the economy and its political agenda. Companies on the right side of policy, backed by structural themes of digital, health, wealth, and green, are where we would focus. 2023 still looks to be a better year for China for the following 3 reasons. Consumption will be boosted by pent-up post-COVID demand and high household savings built up during the pandemic. The broadened financing support to property developers should restore confidence in the housing sector. And finally, regulations easing, the reopening, and greater focus on profitability puts internet companies in a sweet spot. More broadly, on Asia's long-term structural attractiveness, there are also opportunities beyond China. Geopolitical tensions presents both a risk to the world and opportunities for countries like India and the ASEAN region. India, with pro-business reforms and a healthier financial system, could potentially see a recovery in its investment cycle. It's still early days, as the credit multiplier effect and capacity utilization still has some way to go. Similarly, in ASEAN, the share of global FDI flows has been growing. From Vietnam being a prime destination for consumer electronics manufacturing, this has started to broaden, with China growing its footprint in the region, such as the electronic vehicle supply chain in Indonesia and Thailand. Overall, Asia is a good place with more balanced growth levers from China, with its greater economic focus, while India and ASEAN could be at the start of an investment decade. Thank you very much.